Welcome to First Class International Trading Signals channel, trading the right way wherever you are. My name is S and I'll be going through today's educational program. I hope you've been enjoying all the previous programs. For this week, please subscribe to my channel if you haven't done so. Okay, so we'll just move to the first section. So we're in week 4 and we're looking at types of investors. This is quite important in all the financial markets. At FCITSC, I focus on longer term trading, i.e. weekly charts to make trading smoother and catch better trends. So it also makes trading easy, as most of the technical work's done in advance. If you're using signals, etc., the chart patterns. But what you find is the longer term means you've got less monitoring to do with your position. So although you spend more time initially to place your trades, but you don't need to monitor the trades. For example, in intraday trading, where you've got monitor your trade every half an hour and every hour, few hours, it's no good if you've got a busy schedule, if you're working or you're not in town, etc. You haven't got time to monitor. So the weekly trading is much better. So anyhow, let's move on to the institutional investors. So you've got these big institutional investors, hedge funds, consultancies, mutual funds, etc. So most of these big players, such as Citadel, AQED, Shaw, Bridgewater, to name a few, they're mostly based in America, and then you've got some in Asia, Middle East, and other parts of the world. So these big players have a major sway, even on the shareholder board in PLCs, companies, etc. And they can move the price rapidly with their positions. As you're aware, with hedge funds, whatever you invest, with them, it also comes with risk as well, so that's something to bear in mind. But they are significant in the market. They don't control the majority of the market, but the institutions do matter. Like I said, they can affect the share price. If the share price is $1, it could go to $1.30 within a few days. If there's a news breakout, etc., they can affect the market. So when you're trading, just bear that in mind with the institutional investor. Really, you've got quite rich pools of investors who put their money in with the hedge funds. So they've got quite a lot of savings, etc., hundreds of thousands of pounds or dollars that they have spare, and then the hedge fund would get a pool of investors and then invest that money on the market, so in products. So you won't see much in the crypto or Forex areas. It'll be mostly in stocks. They will be in, as you can see, gold is trending at the moment. The price of gold is quite high. So there could be large positions in that area as well. Okay, so we'll just move on now. Then you've got banks. So banks such as HSBC, Morgan Chase, Santander, PNB, Paribas, Deutsche Bank. So the banks have a similar position, but they're not as large positions as the massive hedge funds, which are worth hundreds of billions, if not tens of billions of dollars in the US. So they too have wealth management teams, so you can invest with them. It's a good option, and they can return good amounts. You'll get a portfolio manager in certain areas. They too have influence, in particular when it comes to news, etc., with regards to interest rate and GDP. So the banks do have quite a lot of influence. They could be on, the Bank of Governor in the United Kingdom. They could be on, the panel member as a member. So they're quite influential, the banks. So that's an easy investment tool if you've got money to put on the side. So they'll be less leveraged as well. So they'll be mostly buying stocks or diverting your funds. In a certain areas, it's getting a 30% return a year from a hedge fund or the banks is significant. So you've done quite well. So say if you put $1,000, £1,000, €1,000, at the end of the year you got €1,300, pounds or dollars back. You've done well. So you made 30% on your investment. So that, although it's not a benchmark, it's a comfortable area on your investment. But in shorter term trading, the profits are much higher from your positions. In leverage trading, you can make much more money in a short time scale. And the weekly bars is a good idea, good way. We're trading signals to maximise best of both worlds, so you can get into the trade. If you did well one month, you can take your position out. You're not locked in to the position for months or years, or you can leave your position to the following week or month or days. So you've got a good way to get in and out on best of both worlds position. And then we've got private equity. You'll have to pay a larger share of profits. So these are ventures, mostly like venture capital. Once again, banks and hedge funds, mutual funds, etc. Businesses also could invest on the side as well. Private equity, so they'll put money into the business as a shareholder, etc., in return for profits or shares in the company, etc. That's another area. And just to name a few companies, EQT, Blackstone and TPG Capital, just to name a few. Once again, it's heavily influenced in America, but at the moment, it's good to look around in other places such as Europe, Asia, emerging markets in the Middle East. It's just to make sure you always, as I was stated in my week 2 program, I think it was on tier trading, week 3 program, is to not put your money or your investment or trading in one area, because if something goes wrong in that area, it'll be hard to recover that position. So if the market goes flat for a few years, you're locked in to that position for a few years. So you want to follow a sort of tier or pyramid type of investment, just to make sure you're liquid over when you are trading. And then last but not least, retail trading. So this is where I guess most of the beginners are in the trading world. So there's hundreds, if not thousands, of brokers around the world that allow you to trade in any market, from shares to Forex, indices, commodities, oil, crypto. Thousands of brokers worldwide. There's different types of brokers. It's good to get a broker that is well regulated, so there's good protection and also less leverage. So you don't want to go with brokers that offer massive leverage, because what you see is when you first start trading or using trading signals, etc., it takes time to get adjust to your investments, to get the different varied principles in trading. So beware of large admin fees or swap fees. These are when the position's opened, long term, whether it's days, weeks or month from your broker, because they can sometimes amount to huge 10% of your profit sometimes. And spreads are usually higher than others as well, from other brokers. So that's the buying and selling fee when you make the transaction. So when you spread something, when you ring your bank up, say I want to buy a share, so they charge you a price, or you want to sell a share, they'll charge you a price. And that's it. So that's basically what spread is, the admin fee. So with regards to that, we'll be doing a program anyway later on this swap fees, admin fees and spreads. It's a quite important area. It's quite substantial, and this is another negative in intraday trading. Short-term to longer-term trading, is that you will have to pay more fees and more admin fees, etc. In that area. So with the weekly signals, etc., longer-term trading, you will pay less fees because you're interchanging less. So just to recap, just to make sure you're with the brokers regulated, well regulated. As you can lose large amounts sometimes without protection. This is something you need to learn early on in trading, that you do have a sort of loss or protection. So say you had a position opened in these Forex and the market changed and it raised all your profits, and it also went into your own balance account, and your balance, the funds you put in, also got wiped out as in zero. And after that, you still went into negative balance, where you were in a position where you owed £5,000 to the broker because the position could not stop due to an abrupt change in market conditions. So make sure your broker does cover you for any losses that go beyond what you've invested. So here's a list of some of the brokers: Robinhood, eToro, IG Trading, Saxo. So these are some of the brokers, in Europe at the moment and elsewhere in the Americas they can use. So these brokers will not really make much difference compared to the banks, private equity or institutional investor, but you got to watch the space, for mostly the big banks and the institutional investors. As stated earlier, they can make huge difference on the market. So at the moment at FCITSE, we're only trading with technical analyses, but other factors such as fundamental analysis and sentiment can affect markets. I will go through this area later over the coming months. So, over trillions, are on the market. So there's always a buyer and seller. So that, so it's imperative that the investment is in the right area. So the long-term trading always is better than the short-term trading in this area. So this is something, that you need to get just off going forward in the trading. Once we go, once you pick this up, pick the trading signals up as you go along. So as you get experience, obviously with the trading signals and getting the balance right on the market, so it's an important area. But yeah, that's it. I hope you enjoyed today's program, which was on the types of investors. So I hope you stay tuned for the next program. For next week. That'll be different to this week's program. I'll make you aware at the time. So thanks for watching. I hope you enjoyed it. Please subscribe to my channel and stay. Also, I hope you're making profits as well in earnest. Thanks. Bye.